Hi traders, this is Stacy Burke from Stacy Burke Trading. Welcome to the daily trading report. Today we're going to be reviewing the British pound, the British Canadian, the pound New Zealand, and the pound Aussie. Looking at the 1 hour time frame on the London Open. So coming back to some of the simple concepts we talked about were, number one, the opening range. So the first candles in the open of the London session, we're looking at 2 a.m. to 5 a.m. New York time, and we're looking for potentially one of those candles to possibly be the high or the low for the London session and possibly the session of the 24-hour market. And also looking at the previous day's high or low for signals of the market testing a previous day's extreme, and then also order flow, which is where the market potentially may show an initial push in one direction or the other, where the market is got a fairly aggressive move to make in executing a large amount of orders, which is part of the daily e-commerce for world currency. So let's take a look at the British pound. We're looking at the 25th of February 2016 and the British pound. So again, the previous day we saw during the US session the market broke out, and during the bulk of Asia it stayed sideways, and again we'll mark off Asia's high and low as a selling and buying extreme before we head into the Open of London. And one thing to really understand about that is two things. We've got a layer now of sellers and buyers, and also we have an area of where the market potentially now can place orders. So if this was the low of the Asian session, we know that there's buy stop orders underneath, and the high of the Asia session, which very similar to the US session, we know that there's sell stop orders above that. So as a trader, we know that for the bulk of the US session it stayed within a range, and for the Asian session we know that that range has held itself intact as well. So again, we see a bearish breakout in that first candle of the yellow box, which is the 2 a.m. candle New York, and the market immediately tested that buying level of Asia, pulled back up. Second hour presents and again rejects the upper area where orders have been executed as well. So just in terms of knowing now, not necessarily that the market is going in one direction or the other, but we can see where the range has held strong. Now, coming back to our original rule, is that 80% of the time, roughly, one of these first three candles of the London session may potentially hold as a high or a low for that 24-hour range as well as the London session. So at this point we can suggest that both of these may hold as a high or a low, but we don't have enough information yet really to know, other than we know we have a range-bound market. So we see the 5 o'clock candle print, which is on my charts 11 o'clock. We've got a pin bar. The following candle's an inside bar. So now we've got a market that started to coil. Now we've got a pin bar. If pin bar breakout traders would not have been picked up, as the next candle traded on an inside range, the following inside bar breakout traders would have been picked up. And again, if you were range trading even with this, you potentially may have looked at buying somewhere in that lower part of the range and selling somewhere at the top. Now breakout traders would have traded this. We see a very strong bull candle present. Now we know that possibly the high of that 10 o'clock candle, there's going to be stops. So we know we've got at least a run from that breakout candle to test possibly the stops at the top of the 10 o'clock candle, which would be the 4 a.m. candle New York. And again, that market broke out aggressively. So that market roughly 39.34 to a high of 39.96. So there was a 50 pip range of movement that was tradable. So for breakout traders, they had to sit around for a while, but they definitely got their 50 pips of trading movement. So hopefully that makes sense. Again, you're looking, we saw that inside candle from the London session the day before held strong. That trading range that held in the US and Asian sessions still was strong, and we saw that buying occurred down in this area, and that held true. And now today we see that market has held its ground. It was retested in the US, so we'll see what unfolds later today. So we'll grab the pound New Zealand, and again, a little different scenario with the pound New Zealand. One of the things that we can do also is draw the low of the day from the previous session. So we know that we had a breakout occur on Wednesday. So the market made a lower high and a lower low. So we had downward moving market. We had Asia moving sideways into the London Open. First candle of London Open probed down below the previous day's low. So again, now we've got it. We've potentially in a downward trend. We have a new low being made by the breakout candle of London. If we were looking at this in order flow, we have a micro trend line in the last few hours of Asia, and we have a micro trend line break on that first candle. So again, if you were aggressive and you were looking for a breakout trade on that, you did not get picked up. The market immediately responded with a bull candle. So again, just in that first 2 hours, we had a candle go out of balance, a bull candle go out of balance. What I mean by that is it closed beyond the previous hour's range. And so now we have an out of balance candle. So again, coming back to our 80% rule, where we know that in that first 3 hours of trade, we may potentially have a higher or low established for that London session, or potentially the 24-hour session. So in this particular case, we may be looking at a long market if this 9 o'clock candle held as a low, but you'd be counter trend trading. So we got a micro trend line break. We should get a retest of that low, which we do get on the 11 o'clock candle. Now, if this market is going to continue down, that 11 o'clock candle, sorry, the 10 o'clock candle should hold. What do we see happen? Breakout traders were picked up on that breakout of the low of the 11 o'clock candle. So short traders would have been picked up if they'd placed their stop above the 10 o'clock candle. They had 3 hours of sideways price action before that trend is resumed into the US session. So a little bit of heat there, but nothing that really tested their stop. Trading with the trend, keeping it simple, just using our 10 o'clock as our reference point. The market did resume, and traders may have taken profit, or they may have done a measured move from the previous day's range and just projected that down into the range for yesterday's session. So again, just looking at some basic trend lines, we looked for the initial break of the previous day's low. We looked at our opening range, and then we applied our 80% rule. Just keeping it simple. Again, with any of this, if you're not sure and you're just learning, start with the smallest lot possible till you get your risk management and your reading of the screen intact. Keep it simple, but look for that order flow. We saw order flow executed definitely in a bearish direction. The market immediately pulled back, went out of balance, and came back into range. 80% of breakouts fail, and in this particular case, if you didn't trade until the break of the 9 o'clock candle, you didn't have as much time to sit around and wait. You could have even put a limit order in there, and that trade still would have netted you a nice handsome profit of at least 2 to 1. So hopefully that has been of some value today, traders. Keep it simple. Look at the previous day's highs and lows. Look at your opening range. Look at the order flow of the first hour of trade. Look at that 2 a.m. to 5 a.m. setup. Try to stay with the trend and use your trend lines, and may the markets go with you. Stay disciplined, stay focused, traders. Didn't say it was easy, but it is worth it. Have a great day. Hi traders, it's Stacy Burke from Stacy Burke Trading. If you haven't done so, please head over to my website at stacyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.